Arrancamos ahora sí ya con nuestro invitado de todos los jueves, invitado internacional, invitado que lleva meses trayéndonos sus gráficos y que por ahora han sido muy acertados. Jay Kaeppel, Senior Research Analyst at sentimenttraded.com. How are you, Jay? Thank you for coming again.
I'm doing well. How about you?
I'm doing fine. I'm watching the stock market going up week after week, as you told us months ago. And we are seeing also the inflation coming down today with the PPI getting around 0.1%. That's near deflation. So what do you think about this? And is the stock market really doing well? Do you think it will continue for the next month?
Well, 2 weeks ago I talked about the summer rally period, 9 or 12 days, including the first 9 days of July, and that's this year. Obviously, it's been very good. Unfortunately, that period ends at the close tomorrow on Friday, so we'll see where it goes from here. Typically, the market struggles a little bit in midsummer. But you mentioned inflation. The first chart that I have shows that inflation is kind of backing off in a big way in the last 8-10 months. And it's really important. Inflation is one of the most important factors for the stock market for a simple reason. The stock market hates uncertainty more than anything else. And few things create more uncertainty than soaring inflation. Whether individuals, households, or corporations, it messes up everybody's budget when they don't know what they're going to be spending. So what we saw, if you look at the far right-hand side of the first chart, we saw inflation spike starting at about 2021 and reached about 9%, and now, importantly, it's dropped back below 4%. So between 4% and minus 3%, we call that moderate inflation, and the market loves that. And so for the first time, the reason it's significant, for the first time since about the middle of 2021, the model that I follow now puts inflation on the favorable side of the ledger. So that's quite an improvement.
Very interesting, Jay. As you told us, the seasonality was pretty bullish. And also, talking about the second graph we have for this inflation going down, do you think it's a great time to be in the stock market?
Well, the history is very clear. The reason I say it's good news that inflation has fallen back into that moderate range, on this chart, the top chart shows the growth of $1 in stocks over the last 109 years when inflation is between plus 4% and minus 3%. And it's very obvious that that's a good thing. Lower left to upper right is how we all want our equity curve to look. So again, it's a favorable development. And if you, just to compare, if you look at the bottom chart, when inflation is either above 4%, too much inflation, or below minus 3%, too much deflation, you can see how the stock market has reacted. And if you look at the lower right-hand corner, the last 2 years, in 2021, when inflation started to pick up, the stock market kept going for a while. And then we had that big bear market last year, and then about the time that inflation topped out, in late 2022, the stock market bottomed out, and that's not a coincidence. So, again, it's a favorable development that inflation has come back down. We do have to keep an eye. Historically, sometimes it turns around and has a second leg up, so we have to keep a close eye on that. But for now, like I said, this is now on the favorable side of the ledger.
Jay, also, if the base effect is getting away from September, we need to keep an eye on this inflation data, but for sure is doing well. And talking also about the small caps, because we are seeing in the last days mega caps were quite overextended. Right now, small caps are doing better in these last weeks. What do you think about this?
Right. So the third chart shows the relative performance of small cap stocks compared to large cap, and in the far lower right hand we see that it has turned around, as you said, in the last couple of weeks. Now I keep reading a lot of people saying, well, this is the bottom, and I think they may be right. It's something to keep an eye on. For my own purposes, I'm looking for a couple of things before I jump into the small caps. First off, as kind of a trend follower by nature, because I'm not very good at picking bottoms, what I would look for on this chart is for that red line to move back above the blue line, and the blue line is just a one-year moving average. And if that happens, then I can entertain the idea that the trend has actually changed. And it's very important because these trends, large cap, small cap, growth versus value, US versus international, these trends can last for years at a time. So definitely one to keep an eye on.
For sure, we keep an eye on it, Jay. And also about the seasonality of these small caps, I think we have a very interesting chart.
Right. So the second reason I'm not jumping into small caps right now, this chart shows the annual seasonal trend for the Russell 2000 small cap index. It's kind of the blue line on top. And you can see where we are right now. Typically, you get strength early in the year, some weakness June through October, and then a rally towards the end of the year. And so we are getting very close to what is typically a weak time of year for small caps, especially August, September, and October. So seasonality, as always, is not a roadmap. It's just a history of tendencies. But again, for now, until I see that trend really develop, based on this, I'm still standing aside, but I'm ready.
So we keep an eye on small caps, but not for these weeks in the short term.
Yep.
Thank you very much, Jay Kaeppel. As always, it's a pleasure to have you here, to have these excellent charts that people can check on sentimenttrader.com as always. And thank you very much for your time.
Thank you.